Welcome to the channel here today, guys. Welcome to the cave, and today we're going to be talking about NAVI stock. I know this one's not a super popular stock, doesn't have high volume, so not a lot of people are going to care about this really too much, but we're just going to dive into how their earnings look and how I feel like this one's a super big buy right now, in my personal opinion. Granted, always do your own research. So, NAVI stock, is it a buy? So let's dive into a couple of the analytics of this stock here. So the market cap is $1.78 billion, and this is going to be more important when we talk about revenue and earnings. The dividend is a just juicy thick 64 cents per share. This is about 6.46, so a really solid dividend. Price to earnings is 4.68. Guys, that's crazy. Everything in the market is floating around 25 for a PE, a price to earnings. 52-week high of 1550 and a 52-week low of 407, and that was in March when everything was getting blasted. So let's go ahead and dive into some revenue and some earnings numbers, and let's take a look at why this $1.78 billion for the market cap seems so undervalued in my opinion. So here we have our business model, and what they do is student loans. So I owed these guys student loans. I didn't have the best credit when I was 18 and needed co-signers, so they're very high interest. So it kind of kills a piece of my soul a little bit to have to buy this one and like this company so much because I owed them so much money at one point. Thank goodness they're gone at this point now. But their business model is quite simply just collecting on student loans at decently high interest rates, and they pay most of these out back in dividends to shareholders. So in 2019, they had $2 billion worth of revenue and they had $600 million in earnings. Now 2020, with COVID running around, we could assume that they are having somewhat of a dud year from people not being able to afford to pay back their loans or going on deferment or whatever. So in 2020 so far, and keep in mind there's one more quarter yet, they have had $1 billion in revenue and they've had $225 million in earnings so far, and there's one more quarter left. So we can assume that they're going to have 1.3 billion in revenue or whatever, and they're probably going to have somewhere 300-400 million in earnings. So a little bit less, but not significantly enough to devalue the stock a ton in my eyes. So recent earnings, they hit out of the park, but the stock still went down decently, so let's dive into why that is. Earnings being so good, why the heck is it down so much at this point from their last earnings where they just crushed it? So they have a huge lawsuit that's pending right now, and this lawsuit is due to deceptive and misleading practice, and this is due to deferment and other options for payment on loans that were not upfront and open. So a few of the law firms are Rosen and Schall, and they're hoping to lift a decent amount of money off due to these deceptive practices. So this is something, if this lawsuit were to come to fruition, it would really hurt the stock price. But they've had lawsuits in the past. It hasn't really affected their share price so much, so I'm not super duper worried about this one. So I like this one a ton. I think the valuation is ridiculously low for how much money they're bringing in every single year. They're not COVID proof, but they're doing good during COVID, so a second wave isn't going to destroy this one. So I'm a buyer on this one. But again, do your own research on these things. So I like this stock. If you enjoyed the content, think about liking and subscribing, and we'll see how this one does, I guess.